Good morning, everyone. On behalf of ECA and Efic, I would like to welcome you on the third webinar, Export Contract Loan. My name is Christina, and I'm Marketing and Events Coordinator here at the Export Council of Australia. If you have missed, we have previously done 2 other webinars with Efic, and if you have missed to see these, please find them on our website, export.org.au. Our speaker today is Cathie Burrows. She's a director for SME Alliances and Advisors at Efic. Cathie is responsible for developing and implementing the strategies on how Efic works with its government, business, and industry partners to ensure these relationships are beneficial and effective. She has a wealth of experience in trade finance, exporting, and SME finance, having worked for Efic for more than 25 years. Cathie has worked closely with a range of Efic clients to provide them with tailored financial solutions to support their growth aspirations when expanding offshore and winning export contracts. If you have any questions, we will address them at the end, but feel free to add these in as we go. And without further ado, I will hand this over to Cathie.
Thanks, Christina. For those of you who are joining us again, welcome very much. For those of you who are new to the Efic webinars, I'd like to start off by telling you just a little bit about Efic itself and what it is that we do and where we fit into the exporting community.
Efic is a specialist financier, delivering simple and creative solutions for Australian companies to enable them to win business, grow internationally, and achieve export success. As the Australian Government's Export Credit Agency, we operate on a commercial basis to provide financial solutions for Australian SMEs that are exporting, part of an export supply chain, or looking to establish a facility in another country to better service their customers. Our financial solutions include providing loans for additional working capital to support a specific export contract or a contract in an export supply chain, providing bonds or guarantees that might be needed under an export or supply chain contract, providing guarantees to banks to allow them to make additional working capital available for export and supply chain contracts, and providing guarantees for term loans for overseas direct investment. Through our loans, guarantees, bonds and insurance products, we help Australian exporters and subcontractors take advantage of new contract and investment opportunities that may otherwise have been out of reach. If you would like more information on how Efic may be able to help your business grow, please do not hesitate to contact us.
So what I'd like to talk to today is actually that first point about accessing finance or accessing working capital for exporters. When you're exporting, an SME needs to consider a broader picture. The access to finance can be more difficult, as Australian banks are often reluctant to accept overseas assets as a security for a loan. The upfront costs of establishing export operations can take several years to recover. This can reduce your working capital and your cash flow that's available for domestic operations. You may need additional finance just to help deliver on a new export contract. There's a longer cash flow cycle, and that can increase the pressure on your cash flow and your working capital. And finally, SMEs need to consider the risk of getting paid in a currency other than Australian dollars. This foreign exchange risk can impact an SME's profit margin. So, what is working capital? Working capital is the finance that businesses need for their short-term trading operations. All businesses need working capital, but sometimes they're unable to access the cash they need because they have to wait for large invoices to be paid. It can be up to 90 days or more, particularly if it's coming from overseas. The sources of working capital for SME companies can include bank loans, bank overdrafts, retained earnings, credit from their suppliers, long-term loans from financial institutions, or proceeds from the sale of assets. But all of these can become quickly exhausted. In our recent SME Sentiment Index research, we surveyed a range of exporting SMEs and found that access to finance is expected to become more difficult in the next 12 months, with 38% of those SMEs reporting that their financial institutions have either refused them or curtailed a credit line that they have. I'd like to look now at a particular company who had exactly this problem of how to access working capital for overseas contracts in Japan and China.
We established Cathie Burrows in 1984 and we're a medium-sized wine producer. We're located just west of Port Macquarie. We make a large range of wine. We do predominantly table wine. We're employing at the moment approximately 20 people. Here we have obviously our winemaking production facilities. We do everything from growing some grapes, crushing the grapes through the bottling. We have a cellar door, we have a restaurant, and then our land's being rezoned. So in the future we're looking at having accommodation on site. We are a winemaker. In the case of grape growing, we only grow approximately 5% of our own production. So we do rely on buying grapes from growers. We started exporting in 1987. Our main market has been Japan. We're exporting to Singapore, Thailand, Malaysia. In the last 2 years, we've made a concerted effort to focus on China because we can see that it was an emerging growing market. And in many ways, the China market today is very much as the Japanese market was back in 1987. The percentage of our business at the moment for export is approximately 30%. We're looking at growing that export to 70% over the next 5 years. The challenge, of course, is the funding and the capital to support the export growth. The wine industry has an enormous lag phase. It takes us from the day we crush our grapes until that product is ready for the market in excess of 12 months, sometimes 15 months. With that, the arrangement is that if we obtain a sale contract to a client, then Efic will fund or provide capital for us to supply that order. We found Efic excellent. I think the fact that Efic has obviously been so well focused with export certainly made that very easy for us. With Efic support, we're anticipating our exports to double over the next 2 years. Without Efic, that would be extremely difficult. And export is fantastic in the future for the Australian wine industry. And naturally, the free trade agreements recently signed with Japan, Korea, and China are great news, and it gives us the opportunity to take advantage of the opportunities the free trade agreements will give us. There's a strong focus on produce and products from Australia, and it represents a great future, not just for wine, but all agriculture.
As John Cassegrain said, the working capital problem is often a timing issue. You need the money up front to be able to manufacture or produce for the export contract that you have, knowing full well that once you go through with that contract, you'll be able to repay any money that you've had to borrow, but that's some way down the track. This is just a pictorial representation of that sort of contract. In this example, our exporter is actually receiving a deposit to help them start manufacturing, but that's used up fairly quickly. They know once the buyer pays them, they'll be able to cover the additional costs of manufacturing and realise a good profit on this contract. But in the meantime, they have a deficit of $600,000. To finance this deficit with their bank, they may need to provide further security, which they don't have. It's this deficit that Efic's export contract loan is able to fund for them. Repayment of the loan can be made once the company receives the payment from their buyer. So exactly what is this loan that we're able to provide? The parameters are that the loan needs to be equal to or greater than 100,000 Australian. We can lend in Australian dollars, US dollars, euro or pound sterling. The money can be used as working capital for one single contract or several contracts. The idea is, though, that there must be contracts that are in place that need working capital to make sure that they're manufactured or produced. We have a 12-month window available for drawdown, so you don't need to take all the money up front. It can be on a contract-by-contract basis. You have the capacity for multiple drawdowns and for multiple repayments, remembering that those repayments are linked to the actual approved contract payments that you receive. You receive your money from your overseas customer, that's what pays off your loan to Efic. The balance, of course, being the profit for your company that helps you grow to the next stage of exporting. So, what are our criteria? As we said up front, Efic is an Australian government business. Our role is to support the export of Australian goods and services. Therefore, for each contract that we support, we check that the goods or services that are being exported have a substantial Australian content. We also help customers that are in an export supply chain. If you're providing goods to someone here in Australia to help them manufacture something which they are going to export, we consider you an exporter as well, and we're able to assist. In that case, we have a look and see if the goods or services that you're providing to them are integral to that export contract that they have. Efic works in what we call the market gap, and that is where the commercial finance is unavailable or insufficient. If the commercial banking sector is prepared to make the funds available that an exporter needs, that's great. You don't need Efic and we'll step back. However, we all know that banks put limits on the amount that they can lend to you. They look at the security, the assets that you're able to provide to secure the funding that you need, and then they set their limit and they're unable to go above that. Or in other instances, they may not have the appetite for the risk associated with the actual markets that you're selling to. This is what we call the market gap, where the commercial market can't help you, and this is where Efic moves in. It's important to remember that we do work very closely with the commercial banking sector here. So if you come to us and ask us for a loan, we will actually ask you, who is your banker? And go back to them and ask them, are you unable to help this exporter? So it's something that we do check because it's important to us. So once we've overcome that hurdle, what sort of assessment do we do of your business? In other words, we're lending unsecured, which your bank can't do. So how are we able to do that? We undertake an extensive analysis of your business. As well as looking at your financial performance, we'll also assess your technical and managerial performance. Because the money that is going to repay the loan that you take from us is secured by payment that's coming from your buyer, we need to ensure that you have the ability to complete that contract and hence receive that payment. In other words, what we're doing is backing your performance as an exporter. That's why we go into the technical, the managerial analysis, going a step further than a commercial bank would. We'll also look at your buyer's ability to pay and how that payment is secured, and the political and economic risks of the country that you're selling to, because you and we need to make sure that that money is going to come in once you've been able to deliver under the contract as you've promised. Finally, we ensure that your contract complies with our environmental and social policies. So what are the benefits to you as an exporter or as a company working in an export supply chain? The first and most important thing is that you're able to keep your business growing through access to more working capital. It prevents you from losing business to an overseas competitor if you lack the finance that's needed to meet your contractual obligations. Unlocking the working capital means you can finance additional contracts. We're providing point-in-time financing and helping you to make an efficient use of your capital. I've put up there my contact details and the contact details of my colleague Maria Aitken. Both of us are happy to talk to you anytime if you want to call, email, and talk in more detail about your particular circumstances and your particular financing needs to grow your export business. So thank you very much for your time this morning. I really appreciate it. And if there are any questions from anybody, just please type them in the box and we'll have a look at what we can do to help you. While we're waiting, I perhaps would encourage you also to have a look at our website where we've got videos of other exporters that we've helped, similar to Cassegrain. We have no particular limit on any industry that we help, nor do we have any limits on the countries that we're willing to look at. Obviously, some countries are too risky, but we'll have a look at it for you. So don't feel that, oh, I'm not exporting to a European country or an OECD country. We're there to look at the riskier business. We also don't limit ourselves in terms of the type of industries in Australia that we help. It could be that you're producing something here in Australia like John Cassegrain and his wines. You may be manufacturing machinery to be sent overseas, but equally you could be an agricultural exporter. You could be a trader who needs to be able to buy the supply here in Australia to meet the export demand that you're getting from overseas customers. Being able to increase your supply here increases your exports and expands your business in other countries. All of these areas are ones where we're able to help. Well, I'm not sure whether no questions means that everybody had a good understanding of what I'm talking about, or whether everybody's just too shy, or there's just nothing to be covered. No questions, Christina? I think we might leave it there for this morning.
Yeah, I think
this
that's
afternoon
a good idea.
now. Please take down those details. Give us a call if you've got any questions, and please feel free to check out the webinar again, which will be available on the ECA website. Thank you for your time, people.